Hey everybody, this is Carolyn, Kiwi Trader 24, talking about the S&P 500 as we get ready to trade February week 1, 2019. So here is a simplified version of the S&P 500 roadmap. I've been posting this chart and pinning it to my profile every day. Sometimes I miss a day here or there, but there's one always pinned to my profile, and I've been doing that here on FinTwit for the last 9 years. So it's always there. Just circle back to my profile and check it out. I try to update it every day, or at least every other day if things get a little busy. I run a private account as well. There's a link in my profile here. If you want to click on it, it'll take you to a GoFundMe page, and you can read the story about what I do at my private Twitter account and how to be a part of that if you're interested. But in any case, here is the S&P 500 as it stands right now. We've traded up to our 2019 high so far at 2675, and that still remains our closing high for the year as well. That was on Friday the 18th as we went into the long weekend for Martin Luther King holiday. We came in, we gapped down on Tuesday when we came back from the holiday, traded down through the 50-day simple moving average and down to this 2616 edge level. This was left over from back here going into that Friday high. This was on Wednesday of that week where we traded up and rejected the 50-day, came back down and closed at 2610. And then the next day we came in, traded a little lower, but turned the ship around and had a big bullish outside reversal day. Some fake news hit us in the middle of the afternoon, and it pushed us up through the 50-day where we had failed the day before. We pushed through it on that fake news, traded and squeezed out a whole bunch of shorts, came back down, gave back a little bit of those gains, but still closed at a very, very good high point, leaving the close at 2635.96, and then gapped up open on Friday and traded up to what is our high now and our closing high. Well, then we gave them all that back on and then some on Tuesday when we came back from the holiday. We traded right back down through that gap, well into this range, testing all the way back down to that close that had been on Wednesday and on the week before. Okay, so, and that required a break of the 50-day simple moving average. Luckily, though, we did reverse off of that and came back to close the day here, once again, just below where we had closed and left a gap on Thursday. So if you're still with me now, these two levels have become important levels for us to trade around. Let's just call them 2636 and 2616. Okay, then as we got into Wednesday and Thursday of this past week, we came in on Wednesday, we traded down to an even lower low, going all the way down to 2612 and breaking this 2616 level, breaking both the 50 and the 10-day simple moving average. And this was just as the 10-day was making a bullish cross up through the 50-day as well. Well, we came back, we turned around, and we closed back above and made a higher close against the one we had made on Tuesday. And then on Thursday, we did it again. We traded down, but we closed back above the previous day's close. So this set up sort of a little bit of a bullish pattern. And at this point, too, our closes were intermingling with what was our halfway back point for 2018. Well, boom, we came in on Friday and we gapped up again. Sounds familiar, doesn't it? Gap up Friday again. And this time, this gap up was on our, gapped up on what was our overhead gap resistance to begin with on the week to this previous close. We traded all the way on up, filled this gap that we had above us to that previous Friday's close. We looked above that gap fill level, but did not quite make a higher high, and then we came back down and we made a lower close as well. So that leaves us with this little bit of a V formation here, which looks very eerily similar to the little topping pattern that we made in September and October of 2018, albeit that one was about a 2 or 3 week wide topping pattern. This one is a very small one. So if this is a little interim double top pattern here, what it could mean is that we just need to test back down a little bit lower. If this is a double top, it would have to be, to confirm it, we'd have to come all the way back down here to the left-hand side of the screen and break what is our low so far for the year 2019. And we have a ginormous gap here to fill as well. So if we were to have made a little bit of a double top here, we would fill this gap. We would trade back down through that 2018 halfway back. We would trade back down through these two edge levels that we have made for ourselves coming into this year, and we would break the 10 and the 50-day simple moving averages. We would trade back on down here to a 25.85, which is a quote-unquote scene of the crime level that comes to us from the fresh low we made in December, finally breaking what had been the standing fourth quarter low at 26.03. We traded down to 25.85, and then on the day of our Fed meeting in December, we had an impulse intraday high to 25.85, and then melted off of there and sold off for the rest of the year. And then coming back into this year, when I hold it here, you see this little bar. This is a tiny little gap left over to this close on the 14th. But this bar kind of shows you, when you look sideways from it, it shows you all of this churning from this high that was made on the 8th and this sideways action that was made all the way on through to the open on the 15th of January. That was all churning around this 25.85 level. It's a scene of the crime level, SOC, scene of crime level, that has to do with what was going on with the Fed meeting over here. Here, I'll show it to you. It was an impulsive high that we made, and the statement came out. We made that high, and then we flushed down and we traded down on the day, and we came back and closed right about here, and then sold off another 3 days after that to mark our low for the year thereafter. And so when we came back to take this level back, this scene of the crime level, it took us several days of consolidation, people getting on the bus and off the bus and on the bus again in order to take us higher. So if this is a little bit of a double top formation, we've got a lot of stuff to break through, and including breaking this scene of the crime level. Do we really have enough bearish stuff in our arsenal to make us do that? Also, here is our 20-day simple moving average, moving up quickly. I bet on the open tomorrow it's going to be right in here and at somewhere on a 25.80 something handle. And then as we get into Tuesday, it's going to rise up over this 25.85 level, I think. So breaking down from here and forming and turning this V formation into a double top means breaking all of that stuff, including the scene of the crime level and including the 20-day. Ultimately, we do have a huge gap left back here to our closing low for 2019 so far, and this low intraday low as well. So it could be a signal that we've made our high for 2019 so far, and we need to gravitate back to our low for 2019 so far and test that and fill in this gap before we can venture on higher. We'll see. If that's how things turn out. If that's not the way things are going to turn out, if we are going to move out and make a higher move next week, we have to make it over 26.75. It's as simple as that, and we have to close above 26.75. And then from thereafter, we have to continually be stepping up and making higher highs and higher closing highs. That's how we know that we are building a base and stair-stepping our way up. When we made this higher intraday high and this higher closing high here on Friday, and we still have not been able to take out that high, but more importantly, not make a higher closing high, that is not progress. That is, if you want to look at it bullishly, it's consolidation and it's digestion of this move, or you can look at it bearishly and say that this is distribution. This is stuff being offloaded to the masses, and we're going to have a hard rollover. But if we're going to have a hard rollover, it has to prove itself to be as such, and in doing so, it has to break all these levels that we have achieved on the way up. So to get out from underneath this 26.75 level, we have to take out this downtrend that comes at us from off of the all-time high and through the December high. And then we have to make it up here past 27.1051 and past our 100-day simple moving average. Right now, the 100-day simple moving average crossed down through the 200-day all the way back here in the middle of January, on January 14th, that came about. And that should have been a sell signal, but instead the market just went ahead and added on another leg of its upside. You can see here's where things kind of flattened out right at that scene of the crime level, and then we moved on up from there. So when that was happening, we should have had a sell-off, but we didn't. And now here we are getting ready to make another approach at the 100-day simple moving average. This has marked our failure point. The 100-day has marked our point where we have failed on every single bounce in Q4. When I roll this chart sideways here, okay, here was our all-time high, and here's that more elongated out V formation, double top formation that we made in 2018. The selling started with a break of the 10-day simple moving average and a break of the 20-day. Okay, then the next day, a failure to regain the 10 and the 20-day, and we rolled over and went to test the 50-day. Then a failure to hold that 50-day by way of a gap down open that flushed us all the way on down here to this 2710 level. That's where that level is coming at us right now from. That's this first low that we hit in October. The bounce, the very first bounce then, took us to this 2018's level, 2810 to 2815 or so level, and it was a fail at both the 10-day simple moving average and the 100-day simple moving average. And you can see here this blue line, this is the 10-day. The 10-day acted as the downtrend resistance line. Every single intraday high looked through this and failed, looked through it and failed. Okay, so that was a very easy thing to follow. But what the point I'm trying to get at though, is that we came up to the 100-day simple moving average and failed to make it through there. Then our next bounce here in November after the midterm elections comes right up to the 100-day simple moving average and fails once again. Then we flash forward again to December. We try to make it up. It's hard to see it right now, but here's the yellow line. Here's the 100-day simple moving average. Okay, we made it up right in here, and here's where our downtrend comes in and marks its second plot point. Comes from off of that double top area near the all-time high and intersects through this December high. Here was our 100-day just above that. Fail once again, roll over. Okay, and now where we are now in 2019, facing that downtrend that comes off of the all-time high and runs through the December high. That's coming right at us. That'll be at about 26.79 tomorrow, and keeps getting lower and lower with each passing day. We got to get through that, and then we got to get through this 27.1051 level, and we've got to face the 100-day simple moving average for the fourth time. This will be the fourth time we've gotten there. And what's going to happen? Are we going to finally take this thing out and close above it and form a flat, form some consolidation for a few days, and then maybe we have the basis for a move up from there? Or are we going to fail there and roll over? Or are we never even going to get out of this little box that we're in down here that keeps us trapped at 26.75? Okay, so my last thing that I want to take a look at here is the calendar. This is the most heavily reported week of earnings. By the end of this coming week, more than half of the S&P 500 will have reported. Every company is going to have their opportunity. Not every company, but more than half of the S&P will have had their chance to talk about how the trade war and the tariffs have affected their business and how they see it affecting their business in the future. So as we get to the end of the week into these trade talks, maybe that's something that's going to motivate the U.S. side to maybe take a less hard stance, maybe be more negotiable when they see everybody cutting forecasts and earnings outlooks for the coming quarter, if not the entire fiscal year out ahead of them. So starting off with CAT on Monday morning, tomorrow morning before the bell, that's a huge one. So levered to China, that could easily make or break us for the day before the day is even started. Apple on Tuesday already warned on their warnings, on their earnings. State of the Union address, that was postponed. I don't think it's going to be still happening. Originally was scheduled for Tuesday. Maybe it's going to be the following Tuesday instead. China trade talks begin on Wednesday and Thursday. Here is the other main event of the week. FOMC, the Fed meeting, starts on Tuesday, but the statement always comes out on Wednesday, the second day of the meeting, and the statement comes out on Tuesday at 2 o'clock Eastern, followed by a press conference. As we have been told, from here on out this year, it is planned that there will be a press conference after every meeting. Every meeting goes quote unquote live. Last meeting, that's where we traded this 25.85 scene to the crime level and rolled over from there. Are we going to be gravitating back to the scene of the crime one more time before we can take off? Is that really what's going to be about rolling over and making this look like a double top formation here? Is that going to be the reason why we maybe trade back to 25.85? Because this was where we traded at the last Fed meeting. And over here, you see this candle? This is where the Fed minutes came out. So we had gravitated back to this 25.85 in time to read the Fed minutes from that meeting where we had created this scene of the crime level to begin with. Are we going to need to trade back to this scene of the crime one more time? So there you go. Then we have Facebook, Microsoft, Tesla after the bell on Wednesday, and Amazon and Google after the bell on Thursday. This day in 2018, that marked the day that the bottom fell out on the market. That was it. When we came in on Friday, the day after these guys had reported, and actually Apple had reported that day as well. So it was Apple, Amazon, and Google all reporting on the same night. And it had become clear that everything had already been front-loaded into the quarter. Gee, that doesn't look at all like what's going on here, does it? See all this front-loading, this like straight up rally since the beginning of the year? All of that front-loading into these earnings here that all happened that day, and then the market rolled over the next day, and we never saw the all-time high that had been made the week before this. We never saw that all-time high again until the summer of 2018. So just to spook you a little further there. Anyway, so that's the way I see it right now. I hope this gave you, if you were confused or wondering where the hell things were at right now, I hope that this made things a little bit more clearly for you. If you have any questions, I'm happy to answer them. And like I said, if you want to join me at my private account, click and go to the GoFundMe page, and you can read my whole backstory there and what I'm doing for and with people at the private account. There's about 80 people in that private account right now, so it's nice, quiet place where I post everything that's going on, everything I'm doing during the day, and everything I'm seeing. Okay, that's it. Have a great rest of your Sunday night. As always, good luck and good trading.